possibility, again, that we could get a trade deal? How much hinges on this?
Well, I believe that actually the market is telling us that quite a bit of these new highs that we've been seeing for the S&P 500 and broader markets in general are contingent on a trade deal getting done. As the chatter around a trade deal, this big deal getting completed has increased, you've seen the market move higher. We do actually on my team believe that a lot of the run-up hasn't just solely been due to the trade deal chatter, but the improvement in sentiment is certainly, in our minds, due to the trade deal talk, but there are some decent fundamentals. For my team, we're actually a little bit bullish on equities relative to bonds in this type of environment just because of how resilient that a lot of companies have been despite the slowdown that we've been seeing in the growth in China and the slowdown in trade and the manufacturing recession that the U.S. economy has been going through and perhaps emerging from.
Yeah, Kevin, I mean, we had the Fed meeting yesterday, and certainly on hold for the foreseeable future in terms of any kind of move in rates. How much has monetary stimulus fed into the recent round of record highs we've seen?
Yeah, a lot, because a year ago we were looking at a much different situation, lots of volatility and a significant slowing in the global economy. And so the pivot by central banks here and in China in particular did a lot to lift stocks this year. But what hasn't lifted are earnings. And I think the reason that earnings haven't lifted has a lot to do with the fact that there's not a lot of capital spending. Business spending is down. Manufacturing is soft. And confidence isn't there. A lot of it having to do with worry about trade. So if we get something positive on the trade front, that's going to be a step in the right direction to removing some uncertainty, get maybe capital flowing again, business investment stepping up, and then you might get the missing piece for next year, which would be an accelerating earnings forecast, which is not something that we had this year. So we'll have to see. There's a lot of things to accomplish between here and getting a full trade deal done, but a positive step in that direction would be a welcome one for sure.
Brian, what if we don't get great news on the trade front, but we do get a delay in these tariffs on Sunday? Will the market take that as a good sign or kind of resent the overhang still being there?
I believe you're right about there being an overhang then continuing. I mean, right now it seems like, there were some reports around not just postponing the tariffs, but canceling the tariffs that were supposed to go into effect on Sunday and rolling back existing tariffs. So if we actually get a little bit of weakening of that, as far as if it's just a postponement of the tariffs that are supposed to go into effect without actually rolling back existing ones, you could see some of this exuberance turn to a little bit of consternation and questioning about how serious the parties are to actually getting something done. From my team's perspective, we think there's a lot of credibility at stake as far as with trusting the president for the guidance around how trade negotiations are going if it actually ends up disappointing now. So we've set the stage now for people expecting the rollback of some tariffs. And if we don't get that, then we would expect that some of this rally that we've seen this morning to maybe unwind, which isn't a huge amount, but it is a little bit of ding to not just investor confidence, but also to the credibility of the president as he moves forward with these negotiations.
Hey, Kevin, let's say, because it is so many people's base case that these tariffs are delayed, we do get a phase one. Does it change your calculus for the year ahead, meaning looking at wage inflation and more recently commodity inflation, is the likelihood of any movement toward recession now from overheating rather than a lack of activity?
Yeah, no, that's not. We don't see that. In fact, what we're seeing is very low unemployment rate. We're seeing what should be a translation into higher inflation if you follow the Phillips curves, and it's not there. You're just not seeing the inflation come back as you would expect as labor markets tighten. So we're not really worried about tightening labor markets. We're happy to see an increased jobs and more production coming out. But what we would be concerned about is if asset prices got significantly high and extended around the world, such that staying too low for too long in terms of very low interest rates globally could create a situation where you have a painful unwind on the other side. So that's something that policymakers are going to have to wrestle with as we look at record highs in the stock market, record highs in terms of household wealth and things like that.